Welcome to a brand new episode of Finmet Mondays. Sunil, very warm welcome to you once again. We're recording this as of Sunday on the 17th of May, and I think the latest development in the markets that was of interest was the sudden drop in the prices of gold and silver on Friday. We were floating in gold specifically. We were around the 4,600 levels or 4,700 levels, at least at the start. And then there's suddenly $100 drop to 4,500 levels. And everyone wants to understand what transpired, what exactly led to this Friday sell off.
Three factors that led to this sudden drop. One is, we continue to see retail disinvestment in gold. Over the last week or so, for example, if you look at the proxy for retail demand in terms of the GLD, which is the gold ETF in New York, the total holdings of the gold ETF came down to 1033 tons, 1033 tons, which if you look back the last time, which was a big decline actually, compared to, let's say, 1100, 1200, 1100 tons earlier in this year. So if you want to look at the way that the holdings have declined, you have to go back to October, almost 7, 8 months ago, when we were last at 1033 levels. So I think what we've seen is an increase over the last 6 months or so, and now we're seeing a slow decline in holdings, and that sort of epitomizes the fact that retail demand in gold is sort of slipping off. The second thing that's happened is that we've seen gold trade very much like a risk asset, so it's moving in line with the equity markets actually. So when you had a situation where the inflation reading was high, bonds got sold off, we saw equities also sold off, and we saw gold sold off. So that's the second factor, is that the risk off kind of strategy that gold follows. I think the third thing that is also drove gold is the fact that often people look at gold as a zero yield asset, and when yielding assets like bonds are now 30-year bond is now it's 5.2%, 5.12%. So when you start seeing yields go up, people tend to sell gold and go into more yielding assets, and so that was another factor. So the combination of these two factors, retail risk off as well as yielding assets, it was the factors that actually led to gold being sold off.
Understood. Thanks for that, Sunil. There are a few levels to watch out for this coming week. Let's quickly look at the price charts for gold and silver. On the daily chart for gold, one of the things that we're seeing is gold has broken below this 38.2% retracement, which is around the 4590 to 4600 level. This was earlier a pivot level where you see this black color line that was indicating probably a reversal. If gold drops to this level, there's possibly a reversal and a chance of gold again climbing back up. But that does not seem to have happened, at least as of last Friday. We've broken through this level and we've settled on Friday at around 4540, which is the lowest level we've seen in the last couple of weeks. Now going forward in the coming week, we're returning back to this familiar support, which is around 4480, 4490. This is approximately the 4500 level. And just below that, we have this 23.6% retracement, which is at 4397 or 4400. So these are the two levels to watch out for immediately. We are likely to find some dip buying in this region because we've seen in the previous two cycles considerable amount of demand over here. So this is one observation that we probably might foresee again in the coming. On the upside, I think the resistances have slightly changed. We are going to be looking at 4750 as the first, which is a 50% retracement. And if there is a development that propels this move, then obviously the last week's resistance itself, which is around 4850, that comes into play. So fundamentally, we're still in that zone between 4800 to 4400. We've not broken through any levels, but something very similar that we're seeing with silver. Silver, on the other hand, we're seeing that we're starting to see signs of a bearish descending channel. We're seeing lower highs being formed, right since the start of the year. Then again in March, we tried to break above this level, we fell back. And this is again the third sign in this year that silver has not been able to even reach the highs that we've reached earlier. So there seems to be a long bearish descending channel pattern within silver, which is clear. And what is likely to happen as we traverse through silver is we're going to see some compression from these two converging lines that you can see. You're going to see some sellers hovering around this level right here, and you're seeing buyers going to converge around this level right here, which is going to lead to a breakout in either direction. Now, that direction is something we don't know as of today, but it will depend on the markets and the ongoing geopolitical developments right now. But we're starting to see the prices converge towards, let's say, a mean or an average, and this is the level where buyers are most comfortable and sellers are also most comfortable, right? So this is the outlook for silver. In terms of levels for silver, we are currently looking at 70. This is the level to watch out for. And below that, we have supports at 65, 66, and much lower around 62, which were unlikely to hit. But those are the lower levels supposed to be watching for silver. We will continue to monitor the markets this week. There is expected to be quite some volatility. So let's see how the markets play out. Till then, thank you so much and goodbye.